Okay, guys, today we're going to be talking about credit and why it's so important. I know that the US financial system runs on credit. It's very important. And so today, I want to make sure that you understand the system and that you can use it to your advantage. A lot of people have student debt, and a lot of people have credit cards. So to understand how to use both is very important, especially if we're going to go on to the other 6 reasons I'm about to give you right now. Why is credit important? For apartment application, guys, there are some apartments that you won't be able to get into unless you have a 700 or above credit score. You have to have a really good credit score. And if you don't, that becomes a problem. And you can also save on deposits if you have a good credit score. People will try to invite you and give you less deposit because you have such a good credit score. That's very important. So make sure that your credit score is good. The next thing is car loan applications. I remember during 2020, Ford had a promotion. Let's say you were in the market for a car. They were having a promotion where you could walk off the lot with $0 down, no deposit, to get a brand new car. Now, I'm not saying that you should go out and buy a car just because they have the promotion. But let's say you were in the market for a car already. Then just by having a good credit score, you saved on money up front. And that's what it means to have a really good credit score. Also, your interest rates will be lower if you have a better credit score, of course. Student loan applications. Of course, saving on student loan applications, student loans, if you have a better credit score, then your student loans are going to be cheaper. So then if you have to go to college, a great credit score matters, not only for you, but also if you're applying for your children or your parents are applying for you, whoever is watching this, that's why your credit score is so important. Obviously, if you are taking out more money, then that's going to matter a lot more. Once you start getting over 100,000, your credit score makes a world of a difference. So please keep that in mind. Then we have insurance companies. Insurance is usually cheaper for people who have better credit scores. Now, it may not save you that much, but if you have home insurance, that's actually quite a bit. On the smaller end, saving $50 or $100 every month, that's probably worth it to you. So then just by having a good credit score, you can save that money. Going on to the next thing, cell phone contracts. By having a better credit score, you can save on cell phone contracts. For example, walking in, getting a phone without any deposit, just because you have a good credit score, or being able to pay less per month, or having more time to pay off that phone, just by having a good credit score, all of those things are important and accessible to people who have good credit scores. And the last thing here, of course, is a mortgage payment. Now, a mortgage payment can be the difference between a nice life and a very hard financial life. And just by having a good credit score, changing from 4% to 5% can mean the difference between $500 per month or an extra $1,000 per month. So then let's say the average mortgage payment in the US is around $1,500. If you have bad credit, that could be as much as $2,400, $2,800, even $3,000 for the same house. That's what it means to have good credit. And that can be really expensive, not only over 1 month, but over the entire course of that loan. Now, if you're interested in getting a house, of course, you can always contact me. We can talk some more and I can answer some questions for you. I love real estate. But the point is, you can save on your mortgage purchase just by having a good credit score. Okay, guys? So that's very important. So I will also add, there's one thing here that actually wasn't on the screen first, which is that some jobs actually do require a credit check. And if your credit score is bad, you can be denied for that job. Why would they do that? Because a credit score shows how good you are with managing other people's money. Now, if you are in a job where you have to manage other people's money and you don't have a good credit score, you can see how that becomes a problem. What are some jobs like that? Think of military, right? Think of high-level executive positions. Think of any job in a bank, any job in the financial sector. They will make sure that you have a good credit score because you have to be able to manage thousands, if not millions of dollars. So it's very important that you know what you're doing. So then having a good credit score literally makes your life better and cheaper, as you've established. So then, let's talk about how credit scores work, shall we? So a credit score ranges from 300 to 850. A good credit score starts at about 720 Anything above 720 is a good credit score. An average credit score is between 680 and 720. You want to be above average though, so keep it way, way above 720. That's how you have a good credit score. Now, how is it calculated? Check this out. There are 5 categories that calculate your credit score. And I'm going to go through each of them so that you understand. I'm going to do this slowly. So let's do the first one, amounts owed. So your amounts owed is called your credit utilization. That's another term for it. So then, if you have a credit card that's $1,000 and you use $300 out of it, that means the amount owed or the credit utilization on that card is 30% because you're using 30% of the entire $1,000. Now, they recommend that you use just about 30% and no more. Better than that is if you use less than 10%, which would mean you're using only $100 out of that $1,000 credit card. Even better than that would be using just 1%, which would be about $10. I know that's not a lot of money, but that would make your credit score the highest possible. And this accounts for 30% of your entire credit score. So now you understand that. Let's go to the next category of how they calculate your credit score. The next thing, which is 10% of your credit score, is new credit. Now, it is recommended that you don't open a new account more than twice a year, which is about every 6 months. So then, if you apply for a new credit card every month, that's going to be a problem because in 1 year, you're going to have multiple different cards. Try to space them out over 6 months. If you have to, at least wait 3 months and not do it every 3 months. You don't want to have 4 inquiries in a year. But new credit, every time you do a hard inquiry on your credit report, guys, this is what's affected and it's 10% of your score. So try to keep that no more than twice every year. Fantastic. Now we have 15% of your credit score, which is the length of credit history. Now here's the thing. Your length of credit history goes from 15 years plus all the way down to 0 years. If you are in between 0 to 2 years, that's below average, which means that you want to have your average credit history being as long as possible because this accounts for 15% of your score. Fun fact, this explains why when an old account comes off your account, your credit score actually drops because your average age of your credit accounts will shorten. So then if you've had a student loan for the last 15 years and you finally pay it off, people are surprised when their credit score drops. But that was their oldest account. So then if their 15-year-old account comes off of their credit score, then it drops from 15 years or 10 years down to maybe 7. That's a big difference. And that's why your credit score will drop. So it's important to have credit cards open that last a long time, 30 years, 20 years, 40 years, 50 years, and eventually you'll have an amazing or even near perfect 850 credit score. The next thing is credit mix. Now, usually, adults have a lot of accounts. Having 2 accounts, 3 accounts is not that exciting. But once you get to 5 accounts, guys, that is where good and average credit begins, right? So you want to have maybe 5 or 10. That doesn't mean that you need to spend on all of them. You just need to have them open, which is why when you start building your credit, it makes sense to open a card or a credit card or a new account every 6 months. Now, credit cards are free unless you use them and pay interest, which is why I recommend credit cards to start building your credit. But understand, guys, the more credit that you have, the more credit accounts that you have, it shows that you can manage more accounts effectively and responsibly, which is why your credit profile will be higher. Make sense? Awesome. The last thing here is payment history. Okay, guys? So payment history is never missing a payment. It's really that simple. You have 100% payment history, you're excellent. If you have 99%, you're okay. If you have 98%, something's okay, but we need to improve there. And if you have below 97%, that's terrible. That's how seriously they take this credit profile. So never ever miss a payment. This is the one thing I want you to get from this. Never ever miss a payment. Even if you can pay a little, but never ever miss a payment. Okay, guys? Okay, great. So let's dive a bit more into length of credit history. So as you can see here, Length of credit history, but not below 2 years is not ideal. But if you are between 2 and 4 years, that's okay. More than 5 years is where we start to get into good credit. So then, let's say you are 18 years old right now. If you open up two credit cards in the next 2 years and keep those open, then by the time that you graduate, you would be approaching good credit, especially if all of the other things are taken care of. This is why it's so important to learn about credit from as early as possible so that you can take advantage of this. Now, I will tell you a cheat code that I don't tell many people, but since you're here, let's talk about it. If you know someone that has good credit and doesn't use their card that often, someone in your family perhaps, you can ask them to become an authorized user on their card. What does an authorized user mean? An authorized user means that someone will have access to another person's credit history, all of their payments on that specific account. So let's say I'm a parent and I have had a card open with no bad charges, no missed payments, and the credit utilization is below 1%. And I've had it for the last 15 years. What I would do is add my child to that account, and all of my history will now be on their credit profile because they are an authorized user. Fantastic, right? This is a cheat code to get credit up really quickly, so that if you know someone in your family that can help you with this, or you want to do this for someone in your family, you can offer this to them. Fantastic. Okay. So which credit cards do you get? If there is no annual fee and the credit card gives you cash back, then there is no reason to ever close that credit card, especially if there's no annual fee. So then what you want to do is make sure that your first few credit cards are no annual fee credit cards. Every single major bank has these credit cards. Chase, Wells Fargo, Bank of America, you name it. Once you have these credit cards, then use them and keep them, and then you can take advantage of the rewards, cashback, or even the airline miles that they give. Okay? Fantastic, guys. So then how do we use a credit card responsibly? Most people think of a credit card as extra money, but a credit card is not extra money. You don't put something on your credit card and then put something on your debit card and then put something on, for example, monthly payments. That's not how credit cards are supposed to work, guys. So then we're going to have to rewire how we think about credit cards to use it to our advantage. Everything that you buy is limited by your bank account. That's it. A credit card is not extra money. If we are building credit, then we're using credit for the sole purpose of improving and making our lives better, not getting into debt. So then, all of our purchases go through our credit card and are taken out of our bank account. So then, for the last maybe 7 years, I haven't used a debit card. I only use credit cards. But I use my credit card like a debit card because I get rewards and I get so much other benefits, which I'm going to cover in a second, from using a credit card. That's the point of this. If we understand how to use credit cards, then we don't run into trouble. Use it like a debit card and put all of your purchases through so that you don't run into trouble. So then here are a few things to remember. The first is the most important. You never need to pay for your credit report. Every American is entitled to a free credit report from annualcreditreport.com, at least once a year. No, there are other apps that you can use to look at your credit score. Most major banks will have this as a free service. You can also look at Credit Sesame and Credit Karma. Those are not endorsements. I'm just saying that those are two apps that I know about to check your credit score. Fantastic. There's another benefit to using your credit card. So I will tell you, the Fair Credit Billing Act covers a couple things that are important for understanding the benefits of credit card. So did you know that if someone steals your credit card and they charge, let's say, $10,000, according to the Fair Credit Billing Act, you are only responsible for $50. And most major banks will have 0% liability, $0 liability. So then if someone steals your card, you are not on the hook. But debit cards don't have this feature because there is no law to protect debit cards. That's the beauty of credit cards. You are protected. Now, I will tell you, think about this. The credit card is the bank's money. If you were caught in an alley and someone was holding you up, whose money would you rather have? Your money or the bank's money? It's a no-brainer. You'd rather have the bank's money because you can take the bank's money. Good luck. because the bank is going to come after you. That's what a credit card is, guys. Instead of having a credit card, if you have a debit card, then that's your money, and that puts you more at risk. So then to have a little buffer and have some added safety, use a credit card. And let's keep going. So then there's also free travel insurance. Let's say your flight gets canceled. Some credit cards, some travel credit cards will have free travel insurance, especially if you're using a MasterCard. And you have also free rental insurance from certain credit cards. That's another reason why I like using Chase Bank, because I don't have to get car rental insurance. Then I'll also say here, the important thing about using a credit card is that you stay disciplined, because negative effects can stay on your report for up to 10 years, which is why you never miss a payment, which is why you don't want to overutilize, you don't want to open too many accounts at the same time, but also just making sure that you are responsible and you can have a fantastic life with your credit. Okay, guys, that was a lesson on credit cards and debt. Understand, if you are paying down debt, then you're going to have to take this very seriously. But if you are starting from scratch and trying to build your credit, then this is one of the best ways to go about it. And you'll have a fantastic financial life because you made that investment early in your credit. Okay, guys, I will see you in the next video. We're going to be talking about investing. Take care.